The world order just shifted dramatically, within hours of Israel and the United States launching a military offensive against Iran. Global markets reacted violently, with oil, gold, silver, Bitcoin, stocks, and other commodities all swinging sharply. This conflict isn't just a geopolitical flashpoint, it's now a financial tsunami influencing prices everywhere. In this video, we break down exactly how markets are reacting, which prices are surging, and what it means for investors and everyday people worldwide. On February 28, 2026, Israel and the United States initiated coordinated strikes on several Iranian military and nuclear infrastructure targets. Iran's government has been shaken, but has vowed retaliation. And the situation is now one of the most serious global crises in years. This conflict immediately rippled into the financial world, with markets globally responding in real time. Oil markets, prices surge on risk of supply disruption. Energy markets reacted first, and most intensely, with Iran being a key oil exporter and the Strait of Hormuz, a choke point for almost 20% of global oil shipments, at risk. Prices jumped significantly. Traders are pricing in a war premium on crude. Analysts reported that West Texas Intermediate peaked over $67 per barrel, and was up more than 3% on the session as risk of supply disruption rose. Why this matters? Higher oil prices impact fuel at the pump, transport costs, industrial production, inflation globally. Even modest spikes in crude ripple into every sector of the economy. Uncertainty breeds fear, and markets responded with sharp sell-offs. Major U.S. benchmarks like the Dow Jones, S&P 500, and Nasdaq all slid as investors moved out of risk assets and into safer stores of value. Emerging markets and Asian indexes also saw declines, reflecting broad risk-off sentiment. Airlines and travel stocks fell because of rising fuel costs and travel disruption. Tech stocks weakened as risk appetite shrank. Defense and energy sectors rallied on geopolitical demand. One of the clearest and fastest reactions has been in the cryptocurrency market. Bitcoin, the world's largest crypto, fell sharply by nearly 5%, plunging toward $63,000 after the Israel-US strikes on Iran. This marked one of the lowest price points in the past few weeks as investors dumped crypto in a rush to safety. The broader crypto market also felt the pain, with major altcoins like Ethereum, Solana, and XRP shedding significant value as traders reduced exposure across the board. Why crypto fell? Although Bitcoin is sometimes called digital gold, in times of acute fear it often behaves more like a high-beta risk asset. Traders liquidate positions, high-leveraged loans get wiped out. Capital flows into real safe havens like metals and bonds. This shows crypto's current status as a volatile risk asset, not a safe haven. While stocks and crypto fell, precious metals rallied sharply, proving that when fear hits, investors flock to historically stable assets. Gold prices surged by about $100 per ounce, climbing to over $5,278 per ounce on global markets as investors sought safety during war fears. Silver wasn't left behind, increasing sharply as well. Prices moved close to important psychological levels as traders piled in for protection. Safe haven trades often follow this pattern. Gold, primary refuge in times of crisis. Silver, more volatile but benefits strong when fear is high. Beyond oil, other commodities showed movement. Prices in natural gas climbed due to supply concerns and logistical risk, while industrial metals saw mixed action depending on risk sentiment and economic outlook. Why this matters for you? This conflict is affecting real prices and costs that impact everyday life. Higher energy and commodity prices feed into inflation, meaning higher transportation costs, more expensive goods, rising utility costs. Risk asset stocks and crypto may stay volatile for weeks or months, while safe havens like gold will likely hold strength. If the conflict continues or spreads, global growth forecasts could be revised downward. Key takeaways: oil prices surge on fears of supply disruption. Stock markets declined sharply as investors fled risk. Bitcoin plunged toward $63,000, showing crypto's high volatility. Gold shot up over $5,278 per ounce as safe haven demand spiked. Silver rallied strongly as fear-driven asset flows intensify. Thank you. Kindly like the video and subscribe the channel.